The FOMC has stepped up, gone for the biggest cut that they could have, going for a 50 basis point reduction. In this video, we're going to dive into, so what does this mean for crypto? What's the big picture here? And this is going to all tie together with Satoshi's secret. We're going to go into these FOMC documents here where we can see their entire plan all the way up to 2027 and how they've been adjusting it this entire time. This data is essential for the crypto bull market. There was an opportunity for Powell to get up in front of the cameras yesterday and basically cancel the crypto bull market. That could have happened, putting a whole new complexion on this run up, because they're going to do the entire committee voted. We're going to be doing rate reductions coming up on the next meetings. This is what we want to hear as crypto investors, and we're going to get into why. Who doesn't start looking into FOMC and how it affects cryptocurrency? Satoshi is actually thought to have been a team of technical geniuses led by Alan Greenspan, who is the former chairman of the FOMC, because as we dive deeper into these documents and what's going on with the global liquidity cycle, we can see it's not just coincidence. This is all parallel with the last Bitcoin halving. As we start jumping into these charts, but it's actually Satoshi's genius. He wove the halving cycle of Bitcoin in with all of this monetary policy data, all of the trends on global liquidity. Economics 101. And on stock YouTube, for any of you guys who are out there searching the internet for alternate sources of information, every single stock content creator is covering what? The FOMC. They're getting into meticulous detail. They're like, what about the jobs? What about the CPI? Meanwhile, all the crypto investors seem completely naive about it for the most part, because the last cycle was so absolutely geared up from a monetary policy standpoint. Nobody paid any attention. Therefore, there's a lot of these theses, such as, I'm seeing your question, Michael Pressler, and this is a great one right here. So he's got a good understanding, and we're going to pull these documents up. I'm going to show you guys how to get to this website and what documents we're going to look at. We're going to break down all the Fed's plans on rate cuts and why that's so important. The reason why we're not hearing about this in the crypto sector as much as on StockTube, it's every single stock creator. Stocks, it's way harder to get gains. In stocks, like 25% is like, wow, we completely wrecked it this year. We got 25%. That's amazing. In crypto, that's a Sunday afternoon. What we're looking at here is the 1-year treasury. This is part of Satoshi's genius, and this is going to tie into all the documents. Keep these phrases in mind. The 3 phases rhymes with phrases of the bull run cycle. Because as the Fed is stepping up, changing these numbers around, and as they continue to do this, right now is hot time for the Fed. We're getting maximum data, because this chart right here is going to show us when the bull market's going to start, and more importantly, how long it's going to last. The run-up phase, and then, of course, we've got the distribution phase. The reason why AI is kicking off so strong right now is because the distribution phase just got the okay. So we're looking at this date right here, actually up high, and we're going to do this in white arrows. This is when Bitcoin first peaked. This is step 1, run-up phase. February 20th, 2021. Looking back on this chart, and this is why crypto traders from the last cycle had it so good. Because monetary policy was just geared up to the maximum, nitrous boosters, do not stop, do not pass go, print money, and make this bull market supersonic. So they never pay attention to this stuff. The stock traders, specifically more seasoned and salty guys have seen this 100 times over. So they're way more talking about FOMC. Us as crypto traders right now, we definitely want to start getting into the FOMC and studying it because this is crucial time.
Can we see the paperwork on them?
We're going to break out all the paperwork. So check this out. Right here is when the FOMC during the prior Bitcoin halving cycle, which also parallels with Satoshi's genius, the global liquidity cycle, they completely hacked rates down. They were at 1.5%. They just went right to zero. And they actually talked about in the press conference after Powell spoke, for everybody who watched this, one of the reporters intelligently said, what about this new generation of investors who has so much exposure to free money? Because what we're seeing all throughout the distribution phase, that's February 20th, 2020. Looking at the Bitcoin chart, 1 year later, as these bonds unlock, the liquidity goes onto the street to stimulate the economy, build jobs, and in crypto's case, build these ecosystems. Bitcoin's different than altcoins, obviously. There's not a lot of building on Bitcoin, so you'll see its run up and everything is a bit different. That's February 20th, 1 year later. So right now what's happening, Powell's hacking away at these numbers as we speak. He's going to get up at the next meeting and maybe hack it down another 50. And we're going to go into their plans in this document here. And we're going to see every one of their ideas in a second. First, let's just make sure everybody's on square one. On altcoins, it's a completely different ball game. Because we can see, we get the run up for Bitcoin. That's February 20th right there. We still get a massive peak to the upside. Yes, Mr. Miles, it could have went either way. This rate cut could have went 10 ways from Sunday. 50, everybody's rallying right now, but we're going to take a look at previous rate cuts because this rally is not only short-lived, but inside VIP, we've got a couple precise catalysts where we can time exactly when this rally is going to stop and why. Because ultimately, rate cuts are showing they're preventing a greater recessionary thing on our hand. And one of the things that a lot of StockTube is talking about is how Powell was overly enthusiastic that we weren't in a recession and it's all good. And he was just doing this as a preventative measure. During the next opportunity to cut rates, that data, those numbers, and their tone may very well change. But let's stay on task. Yes, here's a great comment by Crypto420. You guys definitely want to hit the like button because this content is making the Caspa community and crypto investors themselves seem much more intelligent than everybody else who's constantly talking about meme coins and secondary catalysts as the main driver. Caspa just had the KRC20 and a new exchange listing, but meanwhile, we're failing to break out. And we're going to actually do, in a moment, a deep dive into the technical analysis on Caspa using our unique repeating trendline system. Those trend lines are what's always holding Caspa back. And once again, it's stopping. More importantly, those fundamental indicators are really secondary because what's going to move markets is money, not retail, but bond drivers. So make sure you guys hit subscribe if you're watching right now, thumbs up, and we always go a step deeper inside VIP, articulating all of this into showing profit as well as a deeper understanding. That's only $47, great deal. So what the Fed's doing right now is they're starting hacking at this 1 year in the future, 1 year from now. So we're talking September 20th, 2025. This is going to be the beginnings of the run-up phase. As that money from the 1 year treasuries is getting pumped back into risk-on assets onto the street to create jobs. And this goes market-wide, also into Wall Street. Crypto is just a secondary of Wall Street. And then we get, and this is key, because they're planning on holding rates down. See, they could do a quick rate cut and we could get a nice pump to the upside. Here's the problem. They start raising rates again, something goes wrong with their battle plan, we won't get a big distribution phase. And we can see on the total 3 chart how important this is, looking at AVAX in particular. So we get the run up, and because AVAX is a layer 1, it has a stronger run up. Look at this GameFi coin. And this is going to help. And we go over portfolios and investing ideas, timing when you're going to purchase. Early, like over last year, obviously you want to be purchasing stuff that's going to have a strong run up. One of the biggest mistakes that we saw in crypto is everybody was like, start loading the bags on GameFi now. And we already saw that fail. But the fundamental reasons behind why it failed is its connection ultimately to the 3 phases of crypto and the bond market. With GameFi, with even DeFi, you've got to have growth on chain. Looking back at the total 3, that's Bitcoin. Nope, that is the total 3. So we get the run up here. That's February. Bitcoin had already topped out. It was like at 65,000 right here. Altcoins aren't even ready yet. Then altcoins start to plow in price and really get things cooking. And we can see this extremely on AVAX, the run up. And then once they got that stimulation of cash, they start building Trader Joe and they start getting ready for the distribution phase. Here's the catch. The executive order. This is going to change and completely reshape this up and coming distribution phase. How many people in the comments were in on the last bull market? Do you guys remember the DGen, DeFi type of stuff? The plug and play miners like Helium, Planet Watch. It was like you can order this hardware, plug it in, set up an app, and in 100 days, you'll get your money back. That was like kind of the going rate during the distribution phase. And that kind of gave crypto in general a bad name. Bored Apes, Yacht Cub, projects like that come out into distribution. People from the stock market, people from the sports book, everybody comes over because they want to get these gains from the run-up phase that they just saw all the crypto investors make, which is doubling down on why we're so early. The whole market's going to completely change, you guys. The projects that are going to come out are going to start to become more frivolous, more quick money, more shady, trying to attract investors to build on top of these layer 1s and even projects like Tau for the distribution. But here's the catch, and this is why AI is doing so well right now. This White House executive order. So simultaneously, we had the 1-year distribution. They start raising the bond rates. This is going to be the sell-off phase because they're providing an off-ramp. And as we start to break down all this FOMC data on how they're going to cut rates, and more importantly, yes, Helium was absolutely crazy. It was a plug-and-play miner, and it had massive upside. And there was a whole spawn of plug and plays. This year, we can see new plug and plays that are actually in place early right now, like Blender. As the distribution phase kicks off, right here, they're actually creating the sell-off phase. We can see June 2013. What do? They're now offering 3%. This is providing an off-ramp for Jane and Jump Street, the market makers. They no longer have to buy cryptocurrency. They can now invest back in the government bonds. You're going to give me 3%. That's good money. That's compounding for a few years. That's great. And look at this right here, June 2022. Right when we reached a local swing high on the bond, the yield, Bitcoin bottoms out, coupled with this regulation that they implemented right here. So there was a quick relief rally and then downside. This is why artificial intelligence is going to be the big narrative coming up in this bull market. And what the Fed just did as we start getting into this data is they just gave the okay on the bull market and the distribution phase as of now. So what we're looking at is just the Federal Reserve schedule. This is really easy to find. You can Google this or chat GPT it. We go down to September, and then we're looking at the projected materials. This is where all their data is stored. We're going to move our face over here and zoom in a bit. Okay. So the federal funds rate, they just whack this down from 5 to 4, and it's looking like in 2025 they're going to continue to chop it down. Powell said that they had projected that they're going to take 200 points off, aka 2% total. So that's going to bring us down to 3. And then it looks like they're going to hold it there for a longer period of time. This can create a larger distribution phase. Everybody makes that connection and understands, right? So previously, this was 1 year time. In order to get the sell-off phase, they've got to create an off-ramp for the bankers and the money makers to get their money out of Wall Street, out of risk-on assets. Crypto's kind of along for the ride with Wall Street, and back into government bonds to make sure inflation doesn't get off the chain and whatnot. Therefore, we can have a larger distribution phase, which means more time for projects and teams to build on chain. This is super bullish for Tau. Tau's an artificial intelligence project that will do very well during the distribution. This is extremely bullish for every artificial intelligent project. They're going to have loads of time to develop and build in AI. Not only is artificial intelligence the fastest growing online website of all time, we can pull up some documents right here showing how fast ChatGPT rocketed to the upside. Let's see if we get a good one. Here we go. Perfect chart right here. We actually asked ChatGPT to pull this up. This is showing how fast these guys got to 100 million users. Netflix took 18 years. Facebook took 4.5. ChatGPT took 2 months. Instagram Threads took 2 days. As you start implementing artificial intelligence into all your social media and any online project, its road to 100 million users is getting even more ramped up. Just another reason why artificial intelligence is looking to completely dominate this bull run. On top of it, now you got the regulation too. So you've got a supply and demand restriction. This is a good question by Henry. What we can notice with the Caspa team is they're very aware of monetary policy. Hence the fact they timed. Cplex is separate from the Caspa team, of course, but they timed the Cplex launch the exact same week as the FOMC meeting. Now, I know as retail, we immediately try to correlate all of this to price action. We've got to zoom out and just totally digest the fundamentals here. The reason why Cplex is launching during the FOMC meeting is because they're looking to get funding. Jane and Jump Street market makers, banker types who were just previously getting 5% on their bonds, they're now getting less. The entire reason that Powell's doing this is to force money out of the bond market and into the street to start stimulating growth in the economy and new jobs. And this works for Cplex as well. So right now, Marathon Digital, they're mining Caspa. That means BlackRock, Jane and Jump Street, everybody who owns a majority share of Marathon Digital, on their prospectus this week, they're saying, oh, look at how much money we're making mining Caspa with the new Cplex. And now they're gearing up for inscriptions. There's talk about starting to do energy DeFi on there with the KII, the tokenization of the carbon credit market, which will be huge. And this is an opportunity fundamentally for them to invest in the Caspa ecosystem. This will pay dividends down the road. It's not meant to rocket the price of Caspa right now. Looking at AVAX to show a clear example of this. So we have the run-up phase on AVAX, and then it was all throughout here. This is when Trader Joe was getting seed funded by the VCs. First, they need an injection of capital, and then they're like, okay, yeah, AVAX is looking good. Let's start to build on this instead of investing back into the bond market, which was paying zero. They're like, well, we're going to make our money in crypto. And Trader Joe and projects such as this start getting in place, creating a larger distribution cycle. One of the reasons why Caspa hasn't seen quite the oomph as other projects have, this will be delayed as smart contracts get released. The larger investors are making note of Caspa's potential as a layer one, but they need to put more of the puzzle pieces together. So right now, as Caspa investors, again, just another fundamental reason why we're so early. We're anticipating the release of smart contracts, which will cue the bigger market moving investors into building on the ecosystem, which is a massive run to the upside. Super early on Caspa. Plus, we've also got this repeating trendline system, which is showing us a lot of resistance. Let's get back into the FOMC data. So yeah, look at where they were before, because this is showing how fast they can change their mind. What's up, Steven? Yes, the show is awesome. Make sure you guys hit thumbs up and subscribe to help give this higher level of understanding. Everyone on StockTube's talking about this. Very few people in crypto have made the connection because the last market cycle, they were all spoiled because monetary policy, this cliff drop is just rocket fuel. That's how we make the connection to the run-up on those dates. Anyway, back to your question and tying it into what we're saying right now. There was just a new exchange listing. These are more of a secondary catalyst. It's the bond market that's really going to get everything moving. And we'll get into the history of rate cuts in a moment. Because when you start visiting around a lot of these StockTube guys, we got the answer right here. Thank you, Josh, for that. Yeah, and there's some potential, there's a lot of potential catalysts besides just U.S. monetary policy. How many people in chat actually watched Powell's entire interview? There was a moment when they paused and started talking about international central banks and why they're spreading it out and keeping it separated from the government to prevent government manipulation of the party in office. They took a moment to almost hint at, in my opinion, the potential for the Bank of Japan carry trade. So this rabbit hole with the bonds goes way deeper than we're touching base on right now. They have this exact type of chart. They have this exact type of setup over in Japan in a different central bank. And what a lot of advanced traders are doing is they're basically going over to Japan, getting a bunch of cash, which is shorting the yen, and then buying United States assets, risk-on assets. This is what caused the carry trade wick to the downside. Let's zoom in more here on Bitcoin. We can see this massive wick to the downside. Also on Caspa, it was right here. Massive downside wick. Notice how, interestingly enough, the Caspa team just recently visited Japan 30 days before the Bank of Japan carry trade. Seems almost like too much of a coincidence. This is about to take place 4:30 in the morning, Vegas time. All the Bank of Japan has to do is increase their rates like they just did here, and the whole market's going to crash right now. The stocks, the crypto, this happy time rally is over. Adding another layer deeper into this, it seems like every 4-year cycle, there's always some catastrophic event causing unnecessary downside. Let's get into the history of rate cuts just in the United States without the Bank of Japan carry trade in general. So we're seeing on Bitcoin, I'll show you where we're at exactly last cycle. The first rate cut is right here, exactly at the bottom of that channel. So we had 10-day candles to the upside, a week and 3 days of upside on Bitcoin. And then the next meeting is around here. I think the next meeting was actually here, and so on. And it continues while they're cutting rates. The market is going sideways and downward. Now, this was the previous rate cut, but there have been multiple sets of this happening mainly in stocks. And from studying that data, we see the exact same thing. The reason why they're cutting rates, while this is bullish, it's bullish long term because they're getting money out of the bond market and getting it onto the street to stimulate growth. There always seems to be some catastrophe, whether it's, remember that movie, The Big Short, the housing market catastrophe, 9/11, something's always going on around this time frame in the global liquidity cycle. Previously, it was lockdowns. That's right here. So right as the market was starting to recover, we're getting the January factor. As the new year unrolls, stocks are now taking on more risk. They have to show profit to their shareholders, et cetera. We're starting to get the January effect, and then it all turns around on its head. This year's January effect could be the Bank of Japan. And we will know that's good information, good research right there. There's $140 trillion in the global liquidity in 2023, and it's increasing about 6% APY. During the last cycle top, it was 100 million. Let's stay on task here with the BOJ potential. So we'll know in the morning. In this scenario, the Bank of Japan is raising their rates. They're now drawing money into their bond market. It's going to cause a collapse like it just did here. For Caspa particularly, we're going back to this x-axis repeating trend line system. Now's a good time to start bringing in the technical analysis. So for everybody who does technical analysis already, you use moving averages, you use Emochi's Cloud. This is an exceptional add-on that will bring all of the technical analysis you're using right now up to another level. It's the repeating trend line system, also known as origin trend lines. We can see starting all the way back in April, this trend line continuously repeats itself as resistance over and over again. It's just the same trend line, just repeating. Utilizing an adaptation of the wick-off breakout method, we've incorporated in a gravitational field. The farthest distance the candle has moved outside of this x-axis downtrend previously, marking when we know it's actually going to start to break out in combination with support trend lines. So what we're seeing here in this black and this purple line, this is a y-axis support. The first time this ever appeared on Caspa's chart was back here during the initial run-up from 1/10 of a cent to a full cent. This trend line, we had cloned it back when the cup started forming, hoping that we were going to get contact off of it bouncing. knowing that trend lines will always repeat, and it managed to catch. So this is acting as a form of support. You can also see on the flip side, this y-axis is acting as a resistance. A good way to digest this intellectually in terms of the power law, imagine that this is a map where they kind of cut out the globe and then just lay it down flat. When the power law is like almost like you're looking at a sphere, something along those lines. With that being said, instead of this being the absolute base, because it's kind of curving from the power law, this support now very well may be up even higher. As we see the Bank of Japan wick down, bounced off here, this could be the y-axis support in the Bank of Japan collapse. It could potentially go all the way down to the cup as well. We'll have to see. But more importantly is its contact with the x-axis trend line. This formation that we're seeing right now, we established this trend line during the last FOMC meeting. This is the KRC20. Let's actually zoom in here. This is the KRC20 peak, and right now we were just trying to break above it and we could not. So this resistance is holding strong. And sooner or later, this current y-axis price channel to the upside or this x-axis resistance is going to give out. The Bank of Japan raising rates easily can cause this. And what will happen to this price is it will start searching for support below this y-axis. And what it's going to do is reconnect with the x-axis all the way back down, as it's done time and time again. Right now, this particular pattern and pushing on the x-axis resistance is very similar to April. A lot of people thought for sure we were going to break out right here. But in fact, we were fairly confident we would get rejected, and we did. And then this making the cold storage buy opportunity. Here's the key. When we get rejected, we didn't even bounce off the x-axis. We fell way below it. So in this scenario, the BOJ goes live. Start looking for this x-axis right here to act as support, stopping the fall to the downside, as well as in combination with this y-axis here. And we can very easily fall under the x-axis. Powell did a very good job of masking the facts that we might be entering into a recession. This market could get pretty bearish. Right now, we're having a good rally. I invite every content creator and everyone who's part of these other groups, because they enjoy working with those traders, to help get them involved with FOMC. This is common knowledge. It's out there for everybody. Nobody has a trademark on utilizing the FOMC. It's very important to do, and everybody should be more aware of it. Looking at the history on the total 3, it gets even more. It's a bit different than Bitcoin, and it's even more bearish on the total 3 chart. Let's get this zoomed in correctly. And we'll talk a bit more on the total 3 because there's some important insight there. All right, here we go. Okay, that's pretty decent. So what we're seeing right here is this is the pre-rate cut rally. Everybody's hyped up because we know Powell's about to step up and cut rates, and this is going to be bullish. But this is indefinitely every time a buy the rumor, sell the news event. At the bottom of each one of these blue circles, that's when the rate cut happened. So you get a rally on altcoins that's anywhere between 4 and 7 days. Look at this monster wick to the upside. Nice upshot, and then you're getting a sell-off. They cut rates again over and over. So for everybody looking to buy cold storage, even with a reduction on the horizon, with entropy changing from the Bank of Japan or some other catalysts coming up very soon, historically, this is only going to last 4 to 10 days. And then this rally is done. The sell-off is going to start. That's a very bold prediction to be making, but I'm stand by that because we have enormous amount of information. We're combining fundamentals with historic as well as technical analysis. Some of our momentum indicators are all showing everything's maxed out. It's topped out, similar to RSI. It's got nowhere to go but down from here. So even with a discount up and coming, there may be even greater discounts as they keep chopping away at rates. So looking at when we exited this last falling wedge, utilizing the wick-off method, we can see we get a sideways and lateral bounce. Right now, we're testing this new falling wedge, the exact same two trend lines put together. This apex is coming together on November 1st, October 31st, right around that range. When the apex of the falling wedge forms, this is like a magnet pulling price down. We got this nice dip right as this previous apex was going to take place. And across charting, every time you see these falling wedges, you'll see this type of phenomenon. So no matter what kind of breakout we get, this really strong rally here, the sell-off is coming. This is the last time they started changing rates. That was more bullish. So we're projecting the total 3 to fall inside this square, inside these dates. And then these will be the discount prices leading into the up and coming rally. Yes, they're going to be the next batch of super talented traders that are amazing at audio video. Audio video skills are a whole nother dimension. We got all kinds of like fancy multi-button computer stuff. It takes experts to wire this up. A lot of these guys are talking about exchange listings as major catalysts. We just had an exchange listing on Caspa. Why isn't it rocketing? It's because it's the bond market. These bonds are going to be the #1 driver. And by keeping an eye on them, what we'll notice is Cplex and all the businesses that are around Caspa, as well as the Caspa team themselves, they're definitely incorporating macroeconomic calendar dates into their listings, like we just saw with Cplex. They're hacking away at this is almost like a government DeFi program where they're paying the investment banker class 5%, 5.5%, and that's compounding every year. So you got $20 million and you stake it in this for 3 years in a row. You're going to get a lot of coin. That's very good return. And it's safe too. You're investing with the United States government here, virtually risk-free. They're offering less cash, which is an off-ramp from this into cryptocurrency. So right now, Jane and Jump Street, everybody who owns a piece of Marathon Digital, they're seeing how much Csplex has increased the miners' fees. They've got paperwork detailed about Caspa on their desk, and they're looking to start building on the ecosystem now. And this will help Caspa immensely during the distribution phase, as opposed to AVAX, which waited until the run-up when those bonds unlock. And then they started building on chain with Trader Joe and then all the other DeFi type of plays and NFTs that the last cycle was notorious for. It's going to completely flip. You guys just wait until the run up happens and everybody starts hoarding onto crypto. The type of projects that are going to be coming out are going to be so frivolous, so quick money, so risky, but people will take it because they're seeing all the gains that we're making off of the run-up phase. So we're still uber early. This is the key. By realizing how this bond market cycle and the fact that they're going to be, as of right now, holding rates down for an extended period of time, this is going to make a larger distribution, and recognizing layer ones like Caspa. Of course, Bitcoin will have an enormously strong run-up phase. They're going to see more gains sooner. And so it's very important that we anchor our portfolio correctly to the calendar dates. Caspa can have an enormous distribution phase, but we want to see those early gains also. Hit millionaire status. If we want, we can go ahead and take some early profit. If you had done that on AVAX, just as an example, you take early profit on AVAX during the run-up, wait a while, and then reinvest, boom. Now, you can just continue to hold. You don't have to reinvest your profit, but everybody who's got, let's say, $10,000 has $1,000 that they can reinvest every month. So as we get closer to the run-up, start going more into projects that are going to have a big distribution phase, and this far away from the run-up, get into projects that are more solid, connected to the bond rate like Caspa. And that's why AI just had such a big move with Tau rocketing, Spectral, which is one of our AI projects. To really get a grasp on AI, we have a load of these 24-point reports. This one's on 01 Labs, aka DEAI. We've got one for Spectral. We've got one for the Alex Becker pick, Desync. We've also got one for GameFi. Let's take a moment to talk about GameFi and meme coins, because they are the last sector of asset havens that will see upside. They're the latest in the distribution phase, but they also can potentially see the highest amount of gains. Looking at Illuvium, this is 75 days after the run-up. These guys get listed. They might have been on some dexes, but this is when they start getting listed on the bigger exchanges. And then they get a huge, this is 25x right here, and it goes up even higher. Meanwhile, with your more solid plays like AVAX, it was just a 3x from the run-up, right? They go from like 30 to 100, 120. But Illuvium, super ripping to the upside. This is all about calendar-wise investing. So when we start building watch lists like we have inside of our Patreon group, we have watch lists right now that are correlated by market cap, but we're going to start repositioning these watch lists and getting them into which phase are these going to have their peak, and therefore which ones we should buy when, knowing that we want to buy the distribution ones later. Looking through everybody's portfolio, it's all the ones that are going to do really well late in distribution: GameFi, meme coins, some DeFi, some real world assets. That's where everybody's taking a loss. A great way to prevent that and balance a portfolio over a 18-month calendar date is to load up on projects that are going to have a big run up. And then as time goes by later on, get into these distribution ones. Inside the United States, you can purchase Caspa on Uphold, which is a good exchange. They used to make you hold your Caspa on the exchange, which obviously nobody wants to do after the FTX collapse. You just go ahead and get your hands on a cold storage wallet, download that off of your exchange. Yeah, you can just go right to Uphold. If you're outside of the United States, there's better exchanges that you can use like MEXC. Yes, Tau and Render. Oh, that's a great distribution project. Render can absolutely lead the way later in the market, because as this new phase of crypto starts after the run up and they start building these more frivolous projects, they start building artificial intelligence that's going to be looking to take over people's jobs and whatnot, Render will get more and more use. It'll be built into more and more projects. Huge distribution phase for Render. So something to start to accumulate towards the end of this year, because we still have some discounts up ahead. It's a very bold prediction to make, but based on all the what's happening fundamentally, historically, as well as in combination with technical analysis, this is starting to look like a type of a double top of a head formation. And then we're going to get a right shoulder like we've seen previously here, right? Look at this. Right shoulder, double top head, dump. Let's clip that out and see how it fits. This is basically the Caspa technical analysis in a nutshell. Yeah, something like this. See what's going on? Boom. Incoming downside, but this connecting with the x-axis. So there's huge catalysts coming up. Everybody's excited about this because it has completely changed the crypto bull run. And with this long period of rates down, the distribution phase is going to get bigger. That's why we're seeing artificial intelligence pick up so much liquidity right now. It's the leading asset haven, because right now the distribution channel is looking like it's going to last longer, which means more time for building on Tau, more time for building on Render, the longer distribution until they start to ramp rates up again and create an off ramp. Now look at how much they've changed since June. It wasn't going to be such a good bull run during the June FOMC meeting. Looking down the road even farther, they can start projecting that these numbers fall even farther. They can step up and do a massive rate cut. Instead of 50 points, why not 75? If they can whack 75 twice in a row, I mean, that will be amazing. And it will help us a lot as traders, because we want to be able to make a correlation directly to when this money is coming out of bonds and entering into crypto, as we can see in February of 2020, marking the clear run-up phase on both Bitcoin and the total 3, followed by the distribution. Caspa, a very strong contender right now in the run-up phase, but they need to release smart contracts that needs to be actually on chain until the market, for the market makers to put their cash down. That's why smart contracts are such a massive catalyst that launch ADA to the moon. Solana even, their recent catalyst this year was they connected smart contracts not only on their native chain, but also on the Ethereum virtual machine right before their run-up even took place. So Caspa sees a delayed reaction to the distribution investing, to the value in Caspa during this phase, based on smart contracts when that happens. My projections for Caspa during the run-up phase, $2 range. During the distribution phase, we can hit 10 with ease. And this is with $150,000 Bitcoin. We can go through and do the entire accounting of this in detail as we start counting how much money is in total circulation right now versus the past crypto bull run. Back here, there was $100 trillion in circulation. Now, and in 2025 and 2026, there's about $160 trillion. Looking at the historical snapshots of Bitcoin, in November of 2021, Bitcoin hit $1 trillion. In 2025, and we can see technical analysis that shows that 150,000 is right around the range of where we're going to be as we're switching from 2025 to 2026. So during the run-up phase, Bitcoin hits 150,000. That puts us at $3 trillion. 150,000 Bitcoins, $3 trillion. When we look into the altcoins, BNB, Solana, Cardano, XRP, ranging from 10%, 6%, 5%, 4.5%. And of course, these numbers fluctuate as those projects hit their cycle swing high of Bitcoin's market cap. So with Bitcoin at 3 trillion, Caspa's able to grab 10% of that. It's a $300 billion market cap. 5%, it's $150 billion market cap. And then you can do your calculations from there. Absolutely rocketing us to the upside. AVAX does 2%. Litecoin, 1.3. So even in the worst case scenario, we get 2%. We're still getting 2% of $3 trillion. So huge upside. And of course, because Cplex is so early right now, getting ready to get investors getting out of the bond market and into Caspa to start building and developing ahead of time, unlike AVAX that waited until the run up and then they started building Trader Joe and everything because Caspa's so ahead of the curve, launching early, getting all these exchanges ready. Its distribution phase can have even more upside, making 10% of Bitcoin's market cap very achievable, very realistic goal for Caspa. And that's putting us in double digits. Understanding its connection, the peak, the 3 phases, all of this, very important stuff. Yeah, they're going to go going with native smart contracts first, following in the footsteps of Solana under the right market conditions, and the Caspa team has enough funding and they can get the work done on time. Who knows? With a longer distribution phase, they may even be able to knock out the Ethereum virtual machines, secondary smart contracts level, which will be parabolically bullish for Caspa. It'll go completely nuclear. And we're not even touching base with the KII and everything that they can do. Well, there's hopium, and then there's actual facts and accounting. So what we're looking at here is all the historic breakdown and where the money's coming from, why it's moving around. 10%, of course, of Bitcoin's market cap, the top of the range. That puts us in double digits. 5%. Virtually every altcoin in the top 20 at their peak hit 5% of Bitcoin's total market cap during the prior cycle. So it's very realistic based on that model to think Caspa can achieve 5% of Bitcoin's total market cap at its peak during the distribution phase, particularly because Csplex has done all of this work to be building ahead of time. Looking at a different Caspa chart, we can see it's very correlated with the bond markets. Every FOMC meeting, when the big dogs get their checkbook out because Caspa's fair launch, they start scooping it up, buying it hand over fist. This insight was actually how we were able to get in on Caspa super early, crushing the rest of the market. Look at what happened right here. From June 1st to the June 15th FOMC meeting, Caspa moved sideways and up. Meanwhile, what was going on in the total 3 chart with altcoins? The rest of social media assumed it was altcoin season as Powell actually raised rates in May. That is one of the most nonsensical statements that anyone on social media has ever made, and crypto banter, altcoin daily. Therefore, all the other content creators were making the assertion that the FOMC raising interest rates was going to cause altcoin season. So we shorted the weekend after, waiting for the rally, and then shorted AVAX. You can go back and watch all those channels and listen to them talk about altcoin season. Oblivious, that was hopium. There was no facts and data to back that claim. This is real facts, John, different. So the market crashes. We were actually short AVAX. And what happened right here is Jane and Jump Street, a big player who actually owns shares in Marathon Digital. They provide a lot of liquidity, which means they're big into buying Caspa. They already own Marathon, so they own some of the Caspa Marathon's been mining. It's important for them to be close to Caspa. Jane and Jump Street dumped all their legacy projects that were too associated with the up-and-coming regulation, trying to get into more artificial intelligence and good use projects like Caspa. So the total 3 jumps, and this is June 1st, right here, massive. It's a bloodbath in markets. The rest of the content creators are like, that's crypto, just dollar cost average. We're like, yeah, we're short. But we noticed right here, Caspa was unfazed. Not only was it unfazed, as the market's dumping, somebody's loading up on Caspa. To us, it's now clear. This is market makers. They're unloading the old legacy cryptos and scooping up Caspa. So we back the truck up and we go all in on Caspa. Then we continue to vet, do more research, and we realize this is going to be our bag. After this FOMC meeting, we gave the 10X call out, massive God candle rocket. Here's another FOMC meeting, rocket. You can see how correlated to the bond market cycle Caspa is. So as we get this bubble popping, this version of the chart shows Caspa will absorb more than its fair share, as it has been historically over the past 2 years, of that money. And that's the number one driving factor, not the dApps, not the exchanges. It's where the bond market is going. Every politician has lobbyists to make sure that there's regulations and policy ensuring that they get this bubble when it pops. And Caspa's already in position to do so with Cplex, Marathon Digital, Jane and Jump Street owning them, and this chart right here. So it's not hopium. It's an articulated accounting effect. Crypto technology moves so incredibly fast. After we backed the truck up, we started researching Caspa. We recognized Marathon Digital would be very interested in mining this. Marathon Digital, they're constantly getting fines for all the energy that they use with their Bitcoin mining. We hypothesized they would be interested because Caspa's ASICs are the most environmentally efficient. We're not going to use the word environmentally friendly, but they're way more efficient than other ASICs. looking back with hindsight, this entire time, Marathon started mining Caspa back here in September, meaning most likely, as we saw that bloodbath on the total 3, guess who that was? Market makers involved around Marathon Digital, they're all looking at the same information. They're all getting ready to make the play on Caspa. Because Marathon's mining Caspa, so much risk is off the table. And as a Caspa maxi and a super Caspa bull, we had always been projecting with a deeper understanding of the Cplex launch and this FOMC meeting, this was not going to lead to a price breakout. I know a lot of people out in cyberspace are like, oh man, it failed. It didn't fail. We're just trying to make that correlation as retail that it's going to rocket the price. They're looking to receive funding. That's what this is all about. So no matter, I see you guys in the chat are talking about proof of work coins. There's no proof of work coins that have connections to BlackRock besides Bitcoin. Let me show you guys something. And this is the connection to this bond market. Nope. All of the other catalysts that people are throwing out there, oh, we need to have here we go. Exchange listings. We need to have all these exciting dApps are pale in comparison to the bond market. This is where the money's coming from. It's the tree that grows money out of it. It's the source of action. And Caspa is so directly connected to it. No other proof of work coins have this. Even if they were faster, more secure, more stable, they don't have the business connections that Caspa does. Here's why. This is Marathon Digital. They mine Caspa with 1% of their hash rate. BlackRock owns that. Jane and Jump Street, they own Marathon Digital. This fits directly into the hypothesis that we had during this crash when Jane and Jump Street sold all of their Webull and Robinhood legacy crypto projects because of this regulation that's going to stop their growth. They're not going to be able to do all these Bored Ape, DeFi, more skeptical crypto projects during the distribution phase. This bull run is going to be different. It's going to be a lot more based in quality projects and a lot more based in artificial intelligence. Jane and Jump Street pulled out of the AVAX's projects like that and started investing in Caspa. That's the hypothesis based on looking at the total 3 and looking at this period of time on Caspa in combination with now, in hindsight, we were already hypothesizing that just from those 2 charts. Now that we can see, oh, Jane and Jump Street owns Marathon Digital. Now we know for a fact. Earlier than September, September's when they plugged the ASICs in. They've been probably planning this for 6 months, a year. Jane and Jump Street's they've got paperwork. They have super nerds breaking down Caspa right in front of them. And because it's fair launch, they've got to buy it on the open market. Super bullish. I can see that everybody's talking about diversification. There's different ways to diversify. Diversifying over the calendar dates in correlation with when the run-up phase is going to take place, when the distribution phase is going to take place, and buying assets in that order, the wisest way to do it. If you ask Warren Buffett, Charlie Munger, and Mark Cuban, if we can invite them into the stream right now, they will say, without a doubt, hands down, diversification is for fools. They will tell you the only reason why people diversify is to protect themselves from stupidity. The only reason that people teach diversification and it became popular at all is because you can see this clearly inside the Caspa community. Caspa Silver versus somebody like Crypto John, who's like, you need at least 20 picks going into the bull run. Who's got more information to sell, right? Caspa Silver's like, buy Caspa. John's like, I've got 20 picks to get into. It's considered by experts in finance to be a voided strategy, diversification. Now, Charlie Munger, who cracks jokes about this all the time. It was every single Berkshire Hathaway meeting. Charlie Munger is just making fun of guys that teach diversification. He's like, all you had to do was go all in. It's very hard, almost impossible to beat an all-in position on Caspa versus if we were to go back to the same time frame and diversify into a mixed bag of different projects. It's very hard to beat Caspa. It's the #1 performing project. Realizing these gains is a whole nother step. So during the 2025 bull market, particularly with meme coins, they're known for having quick rises to the upside, getting out of Tau here, getting into, let's say, Doge. Quick moves to the upside. So if you've got, let's say, 20 charts that are going to end up looking like Doge, this is very hard to actualize your gains. But when you have a majority position, not only do you have a deeper understanding of that project in particular, but you can also incorporate more dollar cost averaging strategies. You end up getting more money in the bank. It's just a human fact because there's less human error. The more positions you have, the more time that you're going to press the sell button, the more charts you have to study. Even grandmasters, the more opportunities to make mistakes you're going to get. So your human error is going to go significantly up with an over-diversified portfolio. Right now, because the Fed has spoken, we're looking to be go launch in the artificial intelligence and distribution phase of crypto. So that's helping those projects out right now. Before the Fed spoke, they could have said a lot of different things. They could have came out and said, we're going to cut by 25 points and that's it. And we're not cutting again. That would have led to less of a distribution, more of a run off top. And a lot of these projects that like GameFi, for example, the GFAL, Lit Labs, these are going to bloom late at the end of the market. There's no need to invest in them right now when we should be focusing on the layer ones, the strong run-up projects. And as we get closer to this run-up phase, now start piling into more artificial intelligence, more distribution levels. We have the best GameFi project in a 24-point report. This is going to crush everything. It actually is fun to play. I'll show you guys the runner-up. The runner-up got a not even near a close second. But this was actually one of the funnest, the most enjoyable looking games to play. Because I've read over, this took 60 hours of grinding to go through every single GameFi project, look at the team, look at everything, and finally come up with the number one GameFi pick. It's not even listed yet. So the most bullish scenario that can happen is like Illuvium. It'll actually get listed after the run-up, which will be epic, and then have its full distribution, its full peak after the bond unlock even takes place. And this game is strong enough to do it. But this one looks really fun. Boss fighter. So people who have NFTs and special items inside the game, which creates the ecosystem in the game, they get to be the giant guys in these arena battles. Meanwhile, all the other players, yeah, they get to be those giant robots. Everybody else is just a normal fighter. And you can win matches to get closer to being a boss, or you can just buy the NFTs. And then you get to be a boss and play this game against everybody worldwide. Very fun game, but it's missing a lot of the elements that the number one pick has, like a connection to Apple and stuff like that. Good position sizing, 80%. And what's going to happen is this guy's all in. Yes, it's very fun to compete, and it's very good to be competitive in cryptocurrency and see what strategies, techniques, and methods actually work. And I'm happy to say, and the only guy that can say, I've got more gains than anybody else that's been videoing crypto over the past 400, 500 days. How did we do it? Everybody else was buying, getting involved here around the FTX collapse, running up here. Everybody went long mistakenly here in May, right when Powell was raising rates, which is, based on this talk and the explanations we just went over, the most nonsensical idea on planet Earth. If you were to go into an economics class and say that, you would get an F. So as Powell raises rates right here in May, everybody went long. You can go back and watch anybody that you think performed better than me, and I can assure you they did not. They go long here and they get wrecked. A lot of these longs were pretty much dead even with where we are right now. If you went into like ICP, for example, ICP is right where it was right here, right now. It's the same exact thing. We shorted AVAX, doubled up, and then rolled all of that into Caspa right here. Getting that additional insight as the total 3 was dumping, this bloodbath was taking place. Caspa was unaffected. And we were like, okay, worst case scenario, using technical analysis, this is a double top. As we had recognized that repeating trend line, this is the technical analysis that we teach, the repeating trend line system. We had cloned this breakout here, and we were waiting to get contact and a reestablishment of that trend line here. Once we allocated it, we were like, oh, we're good. This will hold us up. We'll get at least a double top or potentially a cup and handle, and followed by a bullish breakout. Then we started doing our fundamental research on Caspa using the 24-point checklist. You guys remember that guy who's like really on the spectrum? He used to weigh like 400 pounds. He always talks about ICP. Way back in the day, he used to do these pretty good 20-minute reviews on crypto. He would look at the team. He would look at the dApps. He would go into their LinkedIn page, see where the team used to work. It was not bad. All off the top of his head. These crypto teams are so smart. We got to remember, we're playing poker here at a round table. We've got Jane and Jump Street and the market makers. We've got the Fed controlling the bonds. We've got the teams all sitting around this poker table, and the teams They'll try to hide the weakness of their project to make sure it's acceptable to retail. To think that you can vet a project just in your head, you got to have a written system. So the 24-point checklist, which comes with 84 questions that you can cut, copy, paste, and enter into AI. If you guys are using Google to vet your crypto, forget about it. You got to use AI, either Super Chat GPT or Agent GPT. That's my personal favorite. We've got videos from 400 days ago where we asked Agent GPT, read the white paper of Litecoin. Read the white paper of Bitcoin, read the code, actually read the code of Litecoin and Bitcoin, and then compare it all to Caspa and give me a projection. 400 days ago, it was saying at least 50 billion market cap. That's what AI was saying. And it would crunch down all the numbers, do all this independent thinking. It's a great gateway for us. We want to look at these projects. A huge bullet point to check is the GitHub page. It's all open source. That's where the team posts all their code. You'll often in the white paper see a link to the GitHub. Of course, the GitHub page is written in gibberish. I'm a layman, okay? I don't understand coding. They might as well be talking in Chinese. We have no idea what's going on inside the GitHub page whatsoever. But we don't want to take the team's word for it. What we're going to do is we're going to use artificial intelligence to go into the GitHub page and tell us what's going on. How hard are these guys working? What are they doing? What kind of code are they writing in? You guys know that one project, Alphium? It's the layer 1 with the 81-year vesting cycle, right? Like the emissions is 81 years, which is very bullish because there's supplies basically cut off. There's not going to be any new tokens dumping on. That project isn't written in Solidity, which Ethereum and a lot of the legacy cryptos are. It's not written in Rust, like the newer generation cryptos are, Caspa. It's written in its own custom language called Ralphium, therefore cutting it off to dev teams jumping over and building on chain. So while Alphium can have a good run, it's not going to be because the devs are building on chain. And once we know this about Ralphium and we realize how tricky the team was, we start to look at the dApps that are already up on it. They've got like $20 in their DeFi. Their NFT exchange does like $50 a month. It's almost like they built a couple of dApps as window dressing. And no teams know the language Ralphium, so nobody can like come over from Solana and start building on it. So very skeptical, kind of trading like a meme coin in my opinion. And we get that information from using AI. Otherwise, we don't know what kind of code it's written in. We're laymen. So it's very easy for the teams to deceive us. One of our 24-point reports is on a project called Blender, which is plug and play. This is a type of thing that will come out as the market completely changes during the distribution phase. So after this bond unlock happens, February 20th, 2020, 1-year bond, looking at Bitcoin, February 20th, 2021, 1 year later, this is the run up on the total 3. There's your run up, but it takes more time. And look at this is another interesting point about the run up in Bitcoin. See the distribution phase? It starts peaking right here on like May 10th. Look at Bitcoin. So there's a big sell-off in Bitcoin after the run up. And that liquidity is, of course, going into the altcoins, causing the distribution peak. So the team's very deceptive. We need a written system to vet every crypto project. During the distribution phase, there'll be these plug and play projects that are coming up. One of them called Blender upon doing a quick half an hour review, we thought this project is good. This is going to go somewhere. So we started filling out the report. But by the time we started finishing the report, we had dug up enough information that the team was very clever at being able to hide, that made us realize that this project was taking on too much risk and that we didn't want to get involved with it. So we ended up finishing the report as an example of how you can find bad projects too. So these are mainly all done in AI, and we've got one for GameFi, two for GameFi that aren't even listed yet. One's more of a, I want to say gambling, sports betting-ish type. And the other one is the #1 GameFi pick. The gambling one's Polychain Capital. It's an interesting project. So we've got a question. It's about selling Caspa at $1 to buy the dip. This is a great question, and there's a lot in here to break down that we can actually throw over onto the Bitcoin chart with the price action that's happening right now. So it looks like Bitcoin's starting to pull back a little bit. So there's two parts of this project. I'm going to rephrase it and turn it into something else completely right now. And that is round numbers. Inside of any trading book, inside any trading seminar, one of the first things that they're going to teach you is trading around round numbers. This includes, like on Caspa, we just hit 20 cents, right? Barely shot over it and then rejected. When you start dealing with round numbers, there's a whole new level going on here. There's psychological level of trading. And the market makers, the bookmakers, they're well aware of these psychological levels. For Caspa, $1 is an enormous milestone. Just using that in context, and then I'm going to change it to a different dynamic. Instead of on the x-axis, which is price, we're going to correlate your question into the y-axis, which is calendar date, which we're going to be able to get a much more accurate read on when we're selling the run-up peak, which is what your question is, and it's good. You're associating the run-up top with $1 from the bond unlock, like that February 20th date, 2020, 1 year later, we get the run-up. Always forget about $1. So if it was actually going to go to $1, if that was actually the price target, we'd be thinking like 92 cents or $1.15. $1, round numbers, forget about that. During the run-up phase, based on technical analysis and fundamentals, we're looking at around $1.50 to $2.50 during the run-up phase. Next up is the distribution phase, where we get into the historic Bitcoin. You just saw how we get to $10. We just did it a couple minutes ago. We're not going to repeat ourselves in this video. But we can do the accounting to show how the distribution based on historic, these altcoins get 5% of Bitcoin's market cap. Bitcoin gets up to 3 trillion, which is 150,000. Very doable. Double the recent swing high. Caspa can grab 10% of that. That's a $300 billion market cap. 5% is 150. So we're into double digits or something like $7, $8 there. Those are very realistic. And with this information that the Fed is showing us, they're planning on reducing rates and holding them down into 2026 and 2027. This will create a longer period of distribution with no off-ramp for bankers for the Caspa team to continue to build and create on-chain. Selling some Caspa and then buying into the dip, like on AVAX. We can see here, had you have had this hypothesis on AVAX, that would have been a great score for you. I have hypothesized this already, and you're very clever for asking this question. The reason is everybody's always talking about, well, all of these super early investors from down here are going to eventually be dumping and selling Caspa, so they're afraid it's going to shock the price. This can take place after the run-up. That's what happened on AVAX, without a doubt. So that is a strategy that you could implement. You could also, if you're going to go ahead and sell the run-up top on Caspa, which we correlate directly with the FOMC cutting rates. As this bubble bursts, that liquidity drives into risk on assets in 1 year. So they just hacked rates down. They're going to step up and hack rates down again. Hopefully, something will come up that forces the Fed to cut more faster, giving us a much more direct signal and date like this. Fast forwarding a year, not only is it 550 days after the Bitcoin halving, which a lot of people hypothesize when the top is going to take place on the run-up, but this is when this bond bubble is going to start. That liquidity is going to get into risk on assets. So can the runoff have a drastic sell-off on Caspa? Yeah, that's not a bad strategy. And I have gone over this in my head already. There's another strategy also. I mean, if depending on how bad the sell-off really gets, obviously reinvesting back into Caspa, great idea. You can also get into artificial intelligent altcoins and try to get some more upside there. There could be new listing GameFi, like this Illuvium hit GameFi project. 75 days after the run-up, it gets listed. It may have been on DEXs earlier, but we know it's listed on central exchanges 75 days after the run-up. We take some profit during the run-up off Caspa. Now we can wait for openings on new listing GameFis, like the one we have the 24-point checklist on. It's going to be huge. It's got a lot of connections to Apple, and the game is top quality. More fun than Boss Fighter, because there's a lot of social elements to it. It's very chatty Cathy. So there's a lot of different ways to put spin on what you're coming up with. But yes, that does make sense. And I have hypothesized that over in my head from a potential large sell-off. As this gets closer, we'll have more of an understanding based on technical analysis and fundamentals, how big the sell-off can really get. Caspa hasn't been really getting sold off that much at all. That's all I have on that question right now. Some ideas for you to think about, but yeah, it's a great idea. I can see myself taking some profit off the table during the run-up. Absolutely. Sitting on that and looking for new investments during the distribution phase, without a doubt. Not a lot of profit, but take some down. And then wait for the distribution phase to start really chunking profit out. And ultimately, you want to keep some on the table until we start signaling the sell-off. It will be clear when it's time to get out of our bags. So the longer that we hold, the longer of a chance we have of building, the bigger, the more upside we can get, as we see on AVAX, as we see on FTM. Here's another great example of a project that built a lot. But it will be as clear as day when the party's over. Here we go with FTM. So this, if you sold FTM on the run-up, and said, oh, I'm cashing out, which a lot of people did this. A lot of people, even Alex Becker. Yes, this video will be on the YouTube channel. The live streams that we took down were because we had technical issues. The sound wasn't coming up right. This audio video stuff is like the next level. The specialized skill that everyone's interested in is trading crypto, not the audio video club I was part of in high school. So looking at FTM, Alex Becker talks about this. He says, I took profit too early in all my GameFi plays and all my layer ones last cycle. You ever heard Alex Becker say that? Because what he did was he sold at the run up. Alex Becker has no idea, just like the rest of crypto social media, about the bond market, about how it plays into the three phases of crypto. This is something we implement into all of our trading plans inside of our VIP. We've made very bold statements, very bold projections that this is going to end up in downside. And we have some early board short trades that are open right now. And we're going to be loading up some more short trades when these catalysts get in place to end this rally that we projected would happen after the FOMC and then into downside. So we go bold. We don't just say, oh yeah, dollar cost average or buy on red days. We get into the nitty gritty and we pull up all the data that we can. There's a lot to gain inside VIP. It's a great group. We got all these different categories: the Caspa leverage trading plans, AI altcoins, macroeconomic, pattern directories, new listings, top 100 trading plans, because we're starting to get ready to do some multiplier trades. Start off trading an AVAX, trade a render, and then bounce it over into something in the distribution phase. So get something that's going to run up quick and hard out of this downtrend, something that's going to have a strong run up, sell that on a swing trade, and then load those profits into something for the distribution phase. You see what I'm saying? We're trying to put together multipliers too. Very detailed technical idea, but can multiply a trade by 2x, 3x, you're golden. And then you get a 25, a 50 bagger, and you 2x that, you got it. Videos on how to set up the repeating trend line system. I mean, this has been basically a crystal ball for Caspa the entire year, even now. Look at this x-axis. We always talk about the repeating trend line. The same trend line, as always. Stopping Caspa just stopped it again. And it's very hard to get over that trend line. And using more technical analysis, we can see we're gassing out right now. This looks very similar to me to April. Right here. And then we're falling back to find support off the x-axis. And we have catalysts coming up to time entering into short trades. I'm already in a short trade. I got in before the FOMC on Caspa. Just based on the overall fundamentals, just going to weather the rally, etc. All these 24-point reports, how to use AI. AI is the smartest person in the room. As laymen, we don't understand. We can't fully grasp crypto. We can't read code. We study it all we want. It's always going to be more studying. It's endless studying. The 24-point reports help us focus study onto stuff that's directly correlated with price. So much emphasis is put on the exchanges, the upgrade that the team is making, and we can just see those all failed. To a greater catalyst, the FOMC. A bunch of printouts that you can put into your own trading journal. The 24-point checklist that we already have filled out. And there's 7 of them total. So this is a great online trading journal. You can look back at the trading plans that we did in Caspa during this last X-axis downtrend. And see, we got everybody in at cold storage right at 11.5. And we got everybody in leverage trades long at 12.25 and 13.3. And those all survived the Bank of Japan carry trade. So these were rock bottom low leverage trades, good cold storage. And this is the wick-off breakout system applied to crypto with repeating trend lines. It's an augmented version of wick-off. And we're using that again right here. And it's looking like it's going to pull back. And it was always looking like it was going to pull back. Even in the most bullish scenario where we had actually jumped over this during KRC20 or during the FOMC, we would have peaked out around here and then started using this as the downtrend. But it looked like it stopped it anyway, as we assumed. So great group. It's only $47. You're going to immediately be able to make that much money off the insight we have, grow as a trader, and most importantly, you're going to use your time more accurately with studying. These 24-point reports, they're 8-9 pages a piece, not including links. It doesn't even include the links. So when you get into reading all the links and everything, there's a lot of stuff to go over inside VIP. It's not for everybody. It's for people who really want to step their trading game up to the next level. Building on your trading journal. You've got a digital one right here. Tons of stuff you can download and implement into yours. Greater understanding of AI, greater understanding of technical analysis, and most importantly, that stuff every stock YouTuber is talking about. Every guy that does the stock markets knee deep in the FOMC meeting. They're like looking at the jobs and the CPI and the price of cars. They're taking it way deeper than we are because in stocks, you have to see gains. I always make the correlation that the stock market is like the UFC and crypto's like Bellator. It's way harder to make money on the stock market, and bringing those skills over to crypto only makes us better traders. That's how we've been able to outperform everybody, was from our realization of when Powell's raising rates or when he's reducing them. And right now we're thinking the total 3 gets into this box. We're going to hit this box here. That's the overall projection. Solomon, what's going on? This guy's a Caspa OG. He was in way back in the day, back at the bottom of the cup and handle. So long journey for him. Max Kaiser and the Bitcoin maxis have been aware that Bitcoin is draining liquidity from bonds for 10 years, but altcoiners don't know. That's an exceptional point, tying Satoshi's secret into Bitcoin. So there's theories that Alan Greenspan, who was the former chairman of the FOMC, is behind the team of coders that built Bitcoin. We can take this a step farther as Caspians and start to connect this to Jonathan Cplex, simply because it's Bitcoin. Making a metaphor, could be considered an online chess tournament in computer coding. There's only so many people that could win that particular chess tournament online. It's either Magnus Carlsen, I'm drawing a blank here, Nakamura. Magnus Carlsen or Nakamura, there's a very few people that could actually win the chess tournament online. Thus, only a certain amount of people could have built Bitcoin. And Jonathan Cplex is, of course, somebody who was around teaching blockchain technology at Harvard for a decade and a half. So at least he's been in the same room with Satoshi if he wasn't Satoshi himself. Back to Solomon's point. When they built Bitcoin, they tied it into a factor called the global liquidity cycle. This chart that we're about to bring up has nothing to do with cryptocurrency. This is just economics 101. And this red line is showing 5.5-year wax and wane. Right here is where we are now. We're down at the bottom, showing that all of this money is currently caught up in the bonds bubble. This is 4 years ago. Powell started cutting rates. Looking at the Bitcoin chart, almost exactly. This is frightening how close on the Bitcoin halving cycle Powell starts cutting rates. Right here. Rate cutting throughout September, all through here. We're now on to the next Bitcoin cycle, and the rate cuts have started again. It's almost like Powell is doing this, it would seem, to help the Bitcoin halving cycle. They're going to reduce the supply. They're going to increase the demand as more liquidity is on the market, but it's not. It's Satoshi's genius. He already realized that it's going to be every 4 or 5 years, they're injecting money back onto the street from the bond markets to create jobs, to stimulate the economy. Looking beyond crypto into the stock market, you guys have all seen that movie about GameStop, right? February 21st, 1 year after this bond bubble pops, that's directly when the GameStop peak happened. So GameStop and all of those short squeeze cryptos are taking place at the exact same time that the Bitcoin run-up is, because it's all connected to the bonds. They're pushing that money onto the street to create jobs, and then to prevent inflation, they're getting it back into the federal government hands. And they're doing this, they're controlling the investment bankers by offering them yield. So when they're increasing the rates, it creates an off-ramp. And we can see this as clear as day right here. June 15th, 2022. June 16th, 2022. Bitcoin bottoms out because the Fed is now creating an off-ramp. We're at a new local swing high. Once they start stacking these up, February 15th, 2022, that's the beginning of the end. It's the start of the end once they start raising rates. So we want to keep that in mind as we move forward and looking at the Fed's plan and how they've altered it. They're planning on cutting these rates down and keeping them low for an extended period of time. Now, they might not be able to get it down to zero. Instead, they're going to maybe hold it down for 18 months. This is 1 year at zero. And who knows? They've been lowering this number every meeting. Something comes up, the economy looks a certain way. They can start cutting rates even more drastically, which is how they'll respond to a recession. They'll need to get that money on the street, making jobs. Yeah. And the Bitcoin maxis, the old school guys, they put all this together. Bitcoin is designed like a sponge to soak up money. As the halving cycle takes place, the supply and demand alters. Meanwhile, this bond market is going to increase the demand. Liquidity is flushing into risk-on assets right when the Bitcoin halving takes place, over and over again, almost making it seem like the FOMC is working for Bitcoin, but they're not, because it's most likely that Alan Greenspan, a guy who's mastered all this monetary policy, was behind Bitcoin, ensuring that it would absorb wealth. And this is what we're seeing in Caspa. Looking at this other chart, is Caspa's been getting more than its fair share of this FOMC action. There's no other coins that have been, or projects that can compare to the amount of upside Caspa's getting off FOMCs. Csplex stepping up right now, parallel with this meeting, is to build fundraising for long-term growth. Excellent point, Solomon. Thanks for chipping in. Depending on whether or not there's a recession, we're going to have a bull run at this point. The reason why we're going to have a bull run is because they're going to be bringing these rates down. Therefore, this bubble right here will be deflated. That's going to inject liquidity into the risk on markets. Now, it won't be completely popped and brought down to zero as it was during this last cycle, but it will be deflated and brought down. Now, at the next meeting, if there is a recession inside the United States, they could start to make more drastic moves, start doing a 75-point cut, a full point cut, 100 points right off, really taking money out of the federal government's DeFi type program and injecting that back into the street, Wall Street and crypto, to create more jobs and stimulate the economy. This is what they did right here because of lockdowns. Remember that? And it seems like every one of these 4 or 5 year cycles that Solomon pointed out correlated with Bitcoin, there's somehow some massive emergency happening, whether it's the virus, the housing market crash, airplanes flying out of control. There's always some major event in the economic world that's creating more of a need for the Fed to inject the market with this liquidity. Maybe the most bullish event that could happen would be the FOMC to declare that there's a recession, so they start stimulating the economy more like they did here. This will pop this bubble, and it will go down from farther than 3.5, 2.9. They'll bring it right down. Ultimately, 0 would be the best. And you remember in the FOMC interview, one of the reporters was asking, this is becoming the generation that knows about free money, commenting almost on crypto social media, how all of these kids who experienced the last bull run, and that's all they know for investing, have no idea about monetary policy because it was on full blast. They're printing money and they've got the FOMC rate down to 0, meaning all of this liquidity just surges into the market down here, creating this super fast run up and then this large distribution phase. So the economy starts to get into more trouble. They'll just push more of this cash into it. Of course, this is all at the risk of inflation because of quantitative easing and everything like that. This is a runaway train, big picture. But they've got to do what they've got to do. There's some people that think that we need a massive recession, but the way that they have it already scaled out right now, there will be a bull run with these cuts. They would have to change their mind and start being like, we're going to stop cutting. But that's not their plan. They're going to be cutting, and hopefully they'll just cut more. So good question. The KII, these guys are playing crucial roles into the distribution phase of Caspa. So as we're plotting and scheming potentially a swing trade, taking some profit off the table during the run-up phase and then reinvesting in after the whales and early investors sell into the distribution for Caspa is relying heavily on the KII. They're looking into, you can see right on their webpage, they're talking about They're talking about the tokenization of energy. And what this means right here, energy trading platforms. And what they're talking about there is the tokenization of the carbon credit market. There are multiple documents that you can pull up that are covering carbon credits and why they want to start to tokenize this. The main reason being, who's behind all this climate initiative anyway, besides the World Economic Forum? Of course, it's our friends BlackRock, who own Marathon Digital. Therefore, they have their finger on the pulse of Caspa. It's not like they're heavily invested, but they're seeing perspective and they've got enough money on the table, so they're paying attention to it. A hypothesis that we've put together is a lot of this is because of BlackRock's interest in climate change, climate and carbon credit tokenization. Companies that are compliant with the carbon credit regulation system right now, like Caspa, they get these kind of like bargaining chips that are worth money for being compliant. Let me get a battery for this phone, for the camera. And then what they're going to do is right now it's illiquid market, meaning that they can't sell this. Nobody's around to buy it. Therefore, what they want to do is open it up to the public so everybody can buy carbon credits. And this will take a huge load off the back for Tesla and everybody who wants to start implementing this type of regulation. And also, it will help them regulate even harder. And we know that these guys who are in control always want to regulate more. Let me switch this battery. This is the federal funds plan right now with having a longer distribution channel than the prior cycle is playing directly into the hands of the KII, because they're going to need as much time as possible to get this up and running. Tokenization of carbon credits. So that's going to be absolutely huge. And of course, this opens the door to stable coins on Caspa. The market makers like Jane and Jump Street, one of the common misconceptions that we always hear in the Caspa community is Coinbase and Binance will then have to buy a load of Caspa. Those guys deal the business. So they sell opportunities to provide liquidity to market makers like Jane and Jump Street. They're one of the biggest players in the field. Therefore, it's Jane and Jump Street, not Coinbase, not Binance, that owns all these altcoins. And more importantly, for every $1 in altcoins that they own, they need $1 in stable coins to make a swap. So they own a huge bag of Tether. That's one of the reasons why Solana has had such a nice run up. We covered this in a prior live stream. Solana, because it's been having technical problems, crashing, even though it's cheap and fast, they don't want to deal with it. They don't want to deal with Solana. Of course, Caspa is going to be the best network that the market makers can ideally hold all of their stable coins on. Therefore, they're going to open up the avenues for retail to get their hands on it. If it's good for them, it's going to be what retail is eventually trading. Just like we saw on TV, Caspa was on financial TV in Europe way back, like 400 days ago. Remember, it's like that blonde chick speaking German or Turkish or something? Caspa will make it onto television, in my opinion, during this cycle. Gonna happen, particularly with stable coins getting online and all of that up to par. What's up, Omar? About Caspa's price peak? Absolutely. And this is all based on a historic accounting model. While these other YouTubers are missing a lot of the data, and that makes their predictions and projections seem unrealistic. When we tie it into just this FOMC type of information that we just had, we can put all the puzzle pieces together, and we'll do the quick 5-minute version right now showing how we easily get to double digits. So the FOMC just steps up and they cut rates off. This is going to kick off eventually the run-up phase. We've got 3 phases of the bull run in this model. We can see the prior one right here, February 20th, 2020. On Bitcoin, that's right here. That's the run-up phase. On the total 3 chart, this is altcoins, it's right here. Following after that, we get the distribution phase. So Bitcoin hits its peak before the distribution. During the prior market top, there was $100 trillion in total liquidity right across the world. Right now, it's 160 trillion. So we've already got just more money in general. So as this bond bubble gets pushed out of the government DeFi staking by reducing rates, pushed into the stock market and cryptos to build jobs, to stimulate the economy, to get everything up and rolling, Bitcoin takes a massive position of that. This is a historic flashback to November of 2021. Where's that? Right at the tail end of the market, much more during the distribution phase, right here. Peak of the distribution phase, excuse me. Bitcoin during the last cycle was at $1 trillion. Fast forwarding into this coming peak, is projected to hit $3 trillion. That's realistic, right, Omar? That's $150,000. That's double its recent swing high at 73. You double that, we're at 150. During the peak of the distribution phase, BNB has 10% of Bitcoin's total market cap. Solana has 6, Cardano has 5, XRP has 4.5, and so on. All the way down to AVAX, which is 2.5. These are the top 10 listings. Even Litecoin, 1.3. When Bitcoin's market cap is $3 trillion at $150,000, Caspa, particularly because Cplex is in advance ahead of schedule, preparing for investors like Jane and Jump Street to build, grow, and develop on chain during the up and coming distribution phase. Looking at AVAX, they had the run up, and then afterwards they start building Trader Joe, allowing teams to do projects, either GameFi or goofy Bored Apes Yacht Club memes on AVAX. So now everybody who can code is building on AVAX. This creates the distribution chain. Caspa's ahead of the curve, with Cplex launching early, parallel with an FOMC meeting. This is saying to people like Jane and Jump Street, hey, you can't get 5% buying bonds anymore. Why don't you jump over and invest in Caspa instead? These guys buy enormous amounts of bonds, huge portion of their portfolio. Jump over and start building on Caspa instead. And of course, their perspective into doing this, because they own Marathon Digital. So they've been researching and investing in Caspa since way back in the day. So Marathon Digital announced they plugged in their Caspa miners here, like on September 1st, approximately. So they've been planning that for at least 8 months, probably a year. They might have even been planning it with Caspa during this seed phasing amounts, but they planned that in advance, which shows us as that total 3 liquidity was draining out in this bloodshed during May, during the last final rate hike here, June 1st, blah. Altcoins were getting wrecked. It was a bad time in the market. Caspa was solid. This shows us the market makers were investing in every FOMC meeting. Caspa's getting more than its fair share of this bond correlated assets. So if it just follows in the footsteps of Solana, that's $150 billion market cap, more than that. Same with Cardano and XRP. And they're already so advanced in getting that bond money. There's already a correlation that we can draw, and a lot of it's through this Marathon Digital announcement, which cuts a lot of risk off Caspa. Now, the price is a little bit more, but you're getting a lot more data now, especially when you tie it into the bond markets. So based on the historic amounts, yeah, getting 10% puts us in the double digits. Getting 5%, it's like $8, $7, $8, something around there. You can crunch the numbers on your own. I'm just showing you the whole model and more details on where it comes from. And it's all coming from this bond market. They're cutting rates, stimulating economy. That cash is going to drop in. And of course, Caspa gets more than its fair share. And we know why. Because it's correlated with market makers and everything. They don't want to own their stable coins on Solana. They don't want to do it on Ethereum. Caspa is a better way of doing business. All right, guys. So in summary, this FOMC meeting was great news. And the reason why artificial intelligence has been leading the pack is because what they're showing is a larger distribution phase. Instead of a year, we could easily get an 18-month distribution phase, which gives the projects like Tau, everything AI, which is slated to be the leading second phase, distribution phase project type for this market because of the government regulation. And also in combination with the popularity of AI and ChatGPT. They're the fastest growing projects around. Plus the government, they're just not going to have this degen DeFi stuff. Anybody who was around in the last market, there was strong block, Thor nodes, nodes as a service, meme coins. Remember all the late night talk show hosts were like, you can now pay 6 figures for a JPEG. Just yucking it up. That was almost like a test run for real projects that are going to come out. And with the KII's help, Caspa can lead the path in real projects. In the scenario that KII has enough time to build these energy trading platforms, tokenization of carbon credits, Caspa can completely, without a doubt, will steal the show from how much percentage of Bitcoin it gets. So AI is gearing up to be big. We got a lot of bold claims, a lot of bold projections inside of our VIP, including some key catalyst dates on when this rally that we projected was going to take place after the FOMC, when this rally is going to stop, why it's going to stop, and how far the market's going to crash. This is an opportunity for active traders to get involved in shorts, and also for regular traders who recognize that going long is obviously the number one path to wealth. We can buy on the dip. Staying active is highly recommended, even if it's just in a side bag. You've got 1 million Caspa. Congratulations. Open up a $300 leverage trading account to stay active. Just trade Caspa. Master that chart and all of its movements. When you close your sleep at night, draw it in your mind. Inside VIP, we have the repeating trend line system, standard operating procedures, how to combine this with classical patterns to get more insight into your trading. Caspa leverage trading plans from the previous downward access, so you can see the last breakout and correlations with this one. And then, of course, all of our fundamental research tools, written 24-point checklist systems. We've got 7 reports already published. They're 8 or 9 pages a piece plus links, so it's heavy reading. This can help us study. With crypto, the studying can go on forever. Help us focus our studying on stuff that's actually going to move cash. Based on this FOMC, the bull run is on, with a big distribution channel. Thanks for checking out this video, guys. We'll catch you on the next one.